This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Joining me today here at the Mines and Money Connect conference in London is Daniel Major, the CEO of GoviEx Uranium. Thank you very much for joining me today. How are you doing?
I'm doing very well. It's been a busy conference already.
A busy conference, but it's only the morning, isn't it?
I know,
It's
I've been pretty rushed off.
There's another day and a half to go.
Absolutely.
You feeling, give me a sense of the vibe at the minute then, and the kind of people you've been talking to.
Investors, but I think I come off pretty pumped up from last week, where I was at the WNFC, which is the World Nuclear Fuel Council Forum. There were over 300 members of the nuclear family there, completely bullish. They're looking at increasing their demand forecasts out there. Very clear that the supply side can't keep up unless we do a lot more investment, and for that we need higher price. I've never seen the nuclear industry so bullish as was last week.
Well, let's talk about that then, uranium sector, because this is a sector that has a lot of interest. There's a lot of money, I think, waiting to get in. The uranium price has been, it's been suppressed for quite a long time, hasn't it? But it's doing pretty well recently with a sort of renewed interest.
Yeah, it has. And it's been, the spot price has been kind of sitting around the 51. I mean, for those of us who've been in this a long time, back in 2016, it was $16. So, 51's a big move up. But I think what you've seen is the impact of what's been going on in Russia and the utilities trying to find alternative sources. Don't forget, we have U3O8, which we produce as miners that go to conversion and then on to enrichment. And so a lot of the utilities have been focusing on their enrichment side. So they've been getting EUP contracts to do that. The thing is, they still need the uranium to feed into those contracts. So that demand is there. We're seeing very clear conversation in the conferences where we've gone from underfeeding in that market, where you're maxing up the tails, to now pretty well starting to move into overfeeding. UX Consulting were predicting that is a swing of 33 million pounds of uranium in a market that only consumes 190. So that's a big swing for demand side for uranium already. On top of that, you're looking at, in their uppercase demand, 6% CAGR between now and 2024.
Okay.
So real big swings in demand going forward.
So the vibe that you got from last week at the World Nuclear Forum, was it? Yeah. What's the sense of where the sector is going? I mean, we hear a lot of anti-uranium sort of sentiments coming from the Germans and the French, for example, shutting plants that really they probably should be keeping open given the energy crisis that the world is facing, and of course the shift to the green economy where we want renewable sources of energy, and uranium, I'm definitely in the camp that is extremely renewable and green way of producing energy. What is the sense from the industry of where it's going? Do you get the sense that people are going to come round to it and we're going to have to go down this route and it's going to have its time in the sun?
Oh, it's gone past that point already.
It's
gone past that point. I mean, 2 or 3 years ago, and this was a point made at the conference the other day, was, where are we going to be in 3 or 4 years' time? Was kind of, oh dear. To now, how the hell are we going to keep up?
Okay.
I mean, literally, we have gone through this change as an industry now, and you're seeing it across Eastern Europe. You're seeing it across the whole of Europe, with the exception of Germany.
Yeah.
The Belgians, the Dutch, countries that you would not associated with nuclear energy are now, okay, we're going to build SMRs. The Chinese are going absolutely gangbusters to build forward as well. They're going from 57 gigawatts to 140 by the end of the next decade. You've got India going from 2 gigawatts up to 9 gigawatts, in the next 10, 15 years. You've got the Japanese who turning around and restarting reactors. But it's not just about governments. You're seeing a massive swing in popular vote. And that has come around across Europe, across the rest of the world. The people are understanding that if you want to have clean energy, you need baseload clean energy to go with it. If you want to have a hydrogen story, hydrogen's just a battery. You need to feed that battery and create that battery, and the best way of doing that is nuclear energy as well.
Do you think we're going to see a big supply shortage coming up?
You are, because if you look at all the forecasts that are out there, you've got the old mines that are carrying on, the new mines need higher prices, and then your biggest supplier, which is Kazatomprom, ISR projects fall off a cliff at the end of this decade and need to be replaced, not only by themselves, but by the rest of the industry as well. So there is a supply shortage. The other thing that you're seeing is security supply issues,
Indeed.
which is feeding through, and that's where we sit beautifully in Africa. No one's sanctioning African projects. We can sell to anywhere in the world, and they're looking for diversity as well, where, even the Chinese utilities are saying, well, we can't keep buying just from the Kazakhs. We need other suppliers. The European, we don't want the self-sanctioning of Russian supply. So we need other suppliers into the market. And the same applies to the North American. So that sits with our development projects perfectly positioned for that diversity of supply.
Well, let's talk about your project center. It's a pure uranium play company and purely Africa focused as well.
Exactly.
Okay.
Exactly.
How many projects do you have?
We got 3 projects, but it's really the 2 main projects. So you've got the Madaouela project in Niger, and you've got the Muntanga project in Zambia. Of the 2 of them, the most important at the moment is the Mantanga project, where it is advancement. That is in debt financing. So we're working with Endeavour Financial. We finished the feasibility study of that last year. It's fully mine permitted. We are close to we're looking for the letters of interest for the financial institutions on the debt. We've got a number already signed up. We're just waiting for the last couple to more than cover our debt position. We've been talking to off-takers, which is why I was in The Hague last week, and getting really good feedback from the off-takers, which is when we can show them the clear path to debt, they really want to sit down and negotiate on off-take, as long as we can get a pricing comfortable between the 2 of us. And then that one, if we could get, for example, if we can get that financing sorted out this year, it's 2 years of construction, and then by 2026 we'll be producing uranium in Niger for at least 20 years, producing about 2.6 million pounds per annum. And Niger has been producing uranium since the 70s. Last year it was 25% of all uranium consumed in Europe came from Niger. So it's a well understood jurisdiction with a government that wants uranium mining, likes uranium mining, 20% shareholder of GoviEx. The second project we got, which is Mantanga, we're pushing that one solidly forward. It's a really nice, easy project to develop. It's an open pit heap leach. It's 11 years of mine production once we build it, producing 2.5 million pounds, a lot of exploration upside. That one is currently in feasibility study stage. By this time next year, hopefully we finish that. And that will go into construction and production as well. So, hopefully kind of middle of the decade, we'll be producing 5 million pounds of uranium out of Africa with long life projects with a lot of exploration upside.
Excellent. So really you are not an explorer here?
No, we're a developer.
You're a developer.
But we have so much exploration upside on our own properties.
Excellent, to expand what you've already got.
Yes, no, absolutely. And that's been our strategy. We kind of looked at it and said, well, look, we've got so many pounds already to design a mine around. Let's build them, and then we'll go back to brownfields expansion. And then just keep adding pounds to the existing production.
So you're hoping to get effectively 2 mines into production, within a couple of years, maybe?
Within 4 years. Let's
4 years.
4 years.
Okay. The one in Zambia there is having the feasibility study completed within approximately...
We're within the next year.
Within the next year.
And the other one has already done it.
It's already done, and it's just waiting the debt financing.
Yeah, absolutely.
What stage are you at with that?
Well, as I say, we've already sitting with the LOI stage, so we're just waiting for various financial institutions to sign off. A number have already. We're just waiting for the last couple, and then we want to come to the market when we have a debt structure that's bigger than what we actually require. And we're close to that point.
Close to that point.
We are close to that point.
The people you're talking to, they're doing their due diligence, they're pretty happy.
Well, they've done the initial due diligence that gets them into the LOI stage. The next stage is to get the independent due diligence done. So we've already appointed those people ready to start the work. We already know who the EPCM contractor is. They're already lined up. So when the money is available, they will get onto their work as well. So we're well set. We just want to get past this initial debt stage.
You've got to get through that stage, and everything, once that's secured, then you're good to go.
We're good to go.
You're good to build.
Absolutely.
You have everything in place.
Absolutely. And the team is getting even down to the ESG aspects of what we do. So, you start as an explorer, but you've got to put in place all your systems. You can't plan, what your safety systems are for your acid plant now, but you get ready so the whole system, hybrid-wise, works you towards that. So, we're thinking ahead about how we're going to employ locally, which we do. We have a 100% local employment strategy. How are we going to train people that when we're ready, for those people, they have to be ready for us as well. I noticed from some recent news as well that you actually had a private placement, didn't you? Yeah, we announced a bought deal. last week with 8 Capital and Sprott funding it.
Okay.
In the last year, we've cleaned all our debt off our balance sheet. We owed money to the government, paid that back last year. That's allowed us to move through on all our projects. We're driving forward on the environmental assessments in Zambia. So there's a lot of work going on the ground. This funding will help continue that work. We'll continue the work on the debt, but more importantly is paying for the continued work on the feasibility study. So it's all going into the ground effectively.
Yeah, fantastic. Well, to get Sprott involved in that's a big tick in the box, isn't
Absolutely,
it? Really.
Absolutely.
So you've made a lot of key points there, really. If I ask you to sum up, perhaps, the investment case, if you can.
Well, I mean, look, the first start, you've got to start with the industry as a whole. I mean, as I said, the nuclear industry and therefore the uranium industry is as bullish as we've ever seen it and getting more bullish. There is definitely a supply gap. Africa projects are looking very exciting from a diversity of supply, security of supply point of view. GoviEx has 2 permitted projects here. We are focused on their development. One, as I say, already on the debt side, already partway there, and once that's going, pushed to the final cash. And then the second project, getting it through that feasibility study so it can be. And these are in mining jurisdictions, where we can get the skills for the projects as well.
So in terms of the jurisdiction, it's fantastic to work in as well as if the government are on board.
Oh, totally, totally.
Okay, good.
Totally.
If we just talk about risks very briefly, what could the potential risks be? I guess you've mitigated as many as you can.
I mean, I think, even when we look at inflation risk, we priced our Madaouela project in May last year, which is about the peak of the inflation cycle. I mean, I'm already getting feedback from suppliers that things like shipping costs have dropped substantially since they priced those. So, I think we're well protected on that side. We've obviously got the technical and operational skills risk to go through. The world's a funny place. I mean, even in the equity market, you worry about, where it's going to go. And I still think there's risk in the equity market generally. But I think, with nuclear and uranium, that should offset and be the counter to it, because we're starting to see the uranium price pick up again this week. Already moved up $1 since last week. Yeah. So it is going in the right direction.
Well, I think the key thing is, despite the market conditions, the key is to have good projects, you've got well financed and close to production, which indeed you are. So the little macro environment, it might affect the general sentiment around the sector or the share price, but ultimately it doesn't affect the big picture.
Well, that's right. And if that market does fall apart, we are financed now to get through it.
Perfect. Well, thank you very much for your time, Daniel Major, CEO of GoviEx Uranium, for your time today here at Mines and Money Connect in London.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.